Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so we're 10 minutes from close and basically we've had another fairly flat day. We've grinded high and we're looking to close into a new high. At this point in time, guys, we're still on the uptrend. We're still on that drift up. Cleared through that all-time high, and we're just clawing higher and clawing higher. Very typical coming into a reporting season to have a push higher, guys. Okay, so that we're just beginning the reporting season. We could easily see ourselves continue to push up near 7650, even 7700 in the coming weeks. The typical seasonal pattern, guys, is a run up into August through the reporting, and then around that div time, okay, towards the end of August, coming into September, the market will run out of momentum. It'll likely drift off a little bit and pull back somewhat in September. That's your typical seasonal. It doesn't always happen that way, but that's your typical movements that we see on the markets overall. So at this stage, we're set for upward to sideways movement in the short term. We've got a lot of reporting to come, and I'll talk to that in a moment. And that's really going to help dictate what we do next as well. So coming across the US markets, okay, S&P 500, through this period hasn't been able to really get the same type of momentum we've seen, okay? So they've just grinded more sideways. Yes, they have broken into all-time highs, but I wouldn't really call that a typical breakout, okay? We're just drifting around, and we're waiting to see whether this is going to lead to a fairly sizable push higher or not. One or two things are going to have to happen. We'll either pull back to trend again, need a sell off before we'll push higher, or if a few things play out this week in the right way, we could see a drive higher just on the back of some news. Okay, so just to cover off the US market first, at this point of time, US reporting has come towards the end. It's been a ripper of a reporting season over the US, although forward guidance has been a bit clouded for some companies, and therefore we're not really seeing huge movement up on the back of strong reporting. It looks like a lot of that strong reporting is already cooked in. In saying that, look, there's some parts of the US market that looks a bit expensive. There's some parts of the US market that looks a little bit cheap after this reporting. So I don't suggest that we've hit the top yet, guys. Okay, I do suggest we might see some rotation back towards banks and things like that. That will do well on the back of infrastructure spending. That will do well on the economy's reopening. I don't think we're going to see people leaving equities altogether. They'll continue to shift across. So it's going to be interesting to see what comes over the next 6 months, guys. I think now we've got reporting out of the way. For the US market, really it's all about two things. One is what the Fed's going to do next, and two is how much of this stimulus are we going to see from Biden's administration. Okay, so let's talk about Biden first. His $1 trillion infrastructure plan is being voted on as we speak. Hopefully we'll find out more tonight, so we'll talk tomorrow on that. And if they do get this $1 trillion through, I think that will be a very positive thing for markets moving forwards. Okay, so I don't feel this is priced in. Okay, I really don't. Some people suggest it is. I don't think it is, because if he passes the 1 trillion, it means he has a shot at the further 2.5 that he's pushing for. Okay, so there's a lot of light at the end of the tunnel here from a stimulus point of view, and that's what the market wants to hear. It either wants to hear Fed stimulus, okay, monetary stimulus, or it wants to hear physical stimulus in these times of uncertainty with COVID. Okay, so that's what we're looking for. Even if the spending goes to private companies, it won't matter. It will be strong for the economy, and that will flow back to listed companies anyway, right? So any stimulus into the economy is a positive thing for the stock market, one way or the other, okay? One way or the other. So we'll find out a lot more about that tonight, I believe, okay? And hopefully we'll get a deadline on when that's going to be completed. The Fed, okay, this is the big talk now. This is the big thing. It won't go away. Everyone's worried about inflation. Any type of good data that comes through, you've got a bunch of the Fed guys coming out saying that they should start talking about tapering soon. You've got a bunch of analysts coming out saying that the Fed should taper soon. There's a heap of people thinking that the Fed's going to announce when they're going to taper in their September meeting. Okay, look, I don't think they're tapering anytime soon. I don't think we'll see any tapering out of the Fed this year, is my view. I think that it's going to be something that we'll worry about next year. Right? There's still too much uncertainty with Delta. Even though we've got strong jobs numbers now, it doesn't mean we're going to see the same degree of strength in those types of numbers over the next 6 months if the Delta variant comes through and disrupts things again. Vaccines are a big light at the end of the tunnel, okay, for the economy. The big thing this week, though, that I'm watching for now is the CPI reading, okay, Wednesday night. That's what you've got to be waiting for. The two things over the next 2 days, okay, that we're waiting for here that could be enough catalyst to push markets much, much higher is that CPI reading. If it comes in a little bit lower than expected this time, last two readings have been higher than expected, which has spooked the market. If this one comes in a little bit lower than expected, it's going to see the market roar a bit higher. Also, if Biden can get his $1 trillion infrastructure through. If those two things happen back to back over the next 2 days, I feel market's going to be a bit higher. Okay, so watch out for those two pieces of news. Now, locally, a few things. One, we're coming into a reporting season. Tomorrow we'll see CBA. That's the one most people are waiting for out of the banks. That's going to lead the banks either higher or lower. CBA is very expensive up at these levels from a PE standpoint. They're going to have to smash expectations, give a huge dividend, or do a bunch of buybacks to maintain the share price above 100. If they don't do something big in this report, CBA by mid of September, after the div, early September, you'll find it will come back below 100. Okay, so this is the big thing, right? It's all about reporting tomorrow for CBA. That's either going to drag the banks high or drag the banks lower. So we're really, really keen to see how that goes. The last thing that I really should talk about here is current lockdowns. Okay, so I guess a lot of people are wondering whether the stock market's going to pull back on this or not. At this point, no. So we've got Vic in lockdowns, we've got Brisbane in lockdowns, and we've got New South Wales that are likely not to come out of lockdown until the end of the year. Okay, New South Wales have set themselves up, unfortunately, for a similar style lockdown as what we saw in Victoria through the second half of last year, where we'll lock down for the most of that second half of the year. Unfortunately, that's a stark reality for them, and it's not great for the Australian economy. But okay, and this is the one and only reason why we're not pulling back here, guys. Okay, I actually might be two. One, anyone that loses more than 20 hours is eligible for $750 payment from the Commonwealth Government. I believe the state governments are chipping in on something there too. Might be the business incentives, I can't remember, but nonetheless, you have got government stimulus to help. Okay, or really government aid helping here. Okay, so that's going to stop any big selling in the market. All right. On the other side of it too, you got banks that are willing to pause loans for X amount of months during the lockdowns and things like that to help people out. So the pause of the loans is a great thing for the banks. They still get to charge interest. It's just that the person doesn't have to make repayments. So it means they don't default on the loan. The bank still gets to charge interest, which means they make money out of the loan. And if anything, they're just tacking on more time at the end of the loan to make up for it. So at the end of the day, what real massive risk is there to the economy of locking down when you've got these sorts of things in place? Not a lot. Small business will get hammered here, but that usually means good things for big business, right? And that's what we're talking about here, is the listed companies. So look, we can have a different conversation. I'm having a conversation of what's good or bad for the market, not good or bad for people. I understand this hurts livelihoods, and it's not great. And lockdowns are absolutely horrible. We all hate it. And it hurts a lot of people, right? But for the stock market, I think we're fine. I think things will keep traveling on. There'll be the odd stock here or there that won't like it, but as a broad whole of things, I don't think we're going to see a big pullback on the back of these lockdowns at the moment. If anything's going to pull us back, is going to be that either the Fed or RBA or central banks of the world start unwinding their extremely accommodative stance too quickly. Okay, so we don't mind a slow taper. Okay, that's what we're seeing here from the RBA. It's what we're seeing in the UK. We're seeing slow taperings of the bond buying to see how things go. I think that's all fine and dandy. That's okay. We might see a small pullback in the US market on the back of them tapering bonds, as long as they don't taper too much too quickly. Okay, if they do too much too quickly, we're going to have a crash on our hands. All right, that's the big thing to keep an eye on. Alright, so that's probably enough from me. Thanks for listening in today. I'll just sort of leave it with the thought. Two things this week, guys. CPI out of the US. Okay, that's big. And also what happens tonight into tomorrow night with Biden's voting on his $1 trillion infrastructure bill. Okay, thanks everyone, and bye for now.